don't know, but ultimately it's 14 hours, I think. So that's good. That's good. Got the world view. So let's kick off in Asia, in Singapore, with Kevin Wright, lead analyst APAC for Kpler. Kevin, markets have again opened down. The pressure from the uncertainty from OPEC seems to be taking some of the wind out of the sails of a market that was flying along.
Yes, good morning, Sean. Thanks very much for your kind compliments about the 10-year age gap between myself and Dan. I didn't realise Dan was that. I didn't realise that Dan was that young, actually. But there you go. Anyway, sorry. Coming back to your point, you're absolutely right. An interesting little situation developing in Vienna this week. All eyes are on it. All eyes are going to be on it for the rest of the week until we see some sort of discussion, or sorry, some sort of decision following all of the discussion that's happened. It's very interesting to note the stance of ADNOC and the UAE in particular, very much sort of coming to the fore. And I think that's building on the credibility that they've established over the last several months in terms of compliance. And they're now in a position to be able to say to other members, you must also comply. We are not going to bear the cost effectively of supporting you and of sacrificing our own revenues, for the gain of others. And so I think the market is looking at that and saying, well, if there isn't consensus within the group, it is not necessarily a good sign for where crude goes. I think we need to see an extension of the cuts. Demand is nowhere, and so I think everyone is looking at that and saying, if there isn't agreement across the group, across the organisation, then it creates stormy waters for crude prices.
Dan Graeber, author of the GERM Report, sitting way over in Michigan, as noted. Dan, if there was a sort of just a reminder for OPEC as they sort of contemplate their situation, inventories up a few million barrels by API overnight, somewhat of a stark reminder of what's at stake here when we're still way above 5-year averages on inventories.
Well, I think that, looking, as observing the market in November, crude oil prices were up double-digit %, and there was just this wave of optimism coming over the global economy in general. But I think we woke up in December and realized that, we still don't have a vaccine. Even though the developments are promising, we're still stuck. We have a few months to go. We still have a Trump administration in power through middle of January. You mentioned the inventories too, which I think is interesting because this is the first real one we've seen that's kind of been decoupled from that the Atlanta hurricane season, where we've seen skewed numbers here and there. I'm looking at the numbers across the board here, and distillates are down in some areas, but then we have jet fuel still suffering, even though we've seen an uptick in air travel in the United States in the holidays. And a lot of states are still on lockdown, so it's just like we have nowhere to go pretty fast.
And California warning for possibly even more stringent lockdowns given the COVID challenge that they're facing. Dr. Carole Nakhle, sitting in the middle of the world, it would appear today in Germany. Who would have thought the middle of the world will be the Black Forest? But that's not a bad place for it to be. CEO of Crystol Energy. Sitting where you are, you have the comfort of distance there, Carole. What's your views on the reporting that is identifying that the wedge issue at OPEC is between the two neighbors of Saudi Arabia and the United Arab Emirates?
Everyone. Well, look, there is one word that keeps on being repeated today when we talk about OPEC, that is an OPEC plus, to be more accurate for today's conditions, is consensus. But actually, if you look at the history of OPEC, it was never really about consensus. It's not a coherent organization. You have members with very divergent views. Today, it's getting not only views, but also economic conditions and political aspirations. I mean, you had members killing each other at some point, right? So today, what is interesting is to see perhaps the UAE standing out because it has long been a very strong loyal to OPEC and OPEC Plus today. Okay, they did not meet their quota production in August, but then they adjusted that very quickly. And yet, today they say, no, we're not going to continue with this. We want all those who did not comply to commit or even compensate for that. Now, I think here what the UAE is trying to tell us here, that they're trying to show that there is they are taking a position of strength. But actually, let's be realistic. This will never happen within OPEC. And I think, in my opinion, this is the raison d'etre why OPEC has lasted for so long, because not all members comply, and those who don't comply can get away with it because there is a certain group of countries within OPEC who concentrate on the long-term longevity of the organization, and they are willing to subsidize those who are not able to compensate or to meet their obligations. So therefore, what we are seeing today is really a replica of the last maybe 60, how many years has OPEC been around? 60 years?
60,
yeah, 60 years
at the
today.
age of Kevin's age. Yeah.
He's definitely way much younger than that. But it's interesting.
Half-life. It's the carbon half-life. That's it.
Exactly. But, and also there is a political dimension here. It's not all about oil markets. There is a political dimension. And anyway, I never looked at the Middle East as one coherent entity, but I don't want to go through politics right now. But that should also be taken into consideration, not just oil market conditions driving the UAE's position.
Well, there's certainly no shortage of politics that one could dive into.
Exactly.
Nonetheless. I mean, we're having a lot of things happen this year. I mean, besides COVID and everything else, we've got these new geopolitical arrangements between the Emirates and Israel, and you've got the Iran equation. You've got Jared Kushner in the neighborhood today, apparently brokering a ceasefire, not a ceasefire, but some sort of resolution of the Qatar embargo. So there's a lot of things that can come in and sort of creep into the stability within OPEC. But Kevin, meanwhile, back at the ranch, China's buying lots and lots of oil, and it would appear that there's another armada of ships heading towards China, coming actually from the US. What's Kpler's view on that? Is that reporting accurate?
There's a sort of an in-joke within the research function within Kpler. We refer to what we call the greatest hits, the Kpler greatest hits. And one of them this year, these are stories that keep coming up, that we keep going back to and re-examining. And this Chinese, or this armada of vessels that potentially heading to China, is a repeat of the greatest hits from April and May of this year, when China opportunistically went out and bought a huge amount of crude. This time it's a little bit different, right? Because when it was that sort of post-Russia Saudi spat in March that led to the surpluses and low prices, then obviously the Chinese government just took that opportunity as a given. It was an obvious situation. It was cheap. This time, you're right. I think though, there are vessels certainly on subs and being prepared to make the move from Pad 3 to China and to other parts of East Asia, in particular South Korea. But this is not really about cheapness. It's really just about relative value. WTI Brent was blown out, and therefore, again, it's just an opportunity to buy on a cheaper benchmark basis. And I don't think there's much more to it than that. What we did see in April and May and into June, July of this year was when the Chinese armada arrived, it created huge problems for the infrastructure and it created significant congestion. Now, Chinese inventories have not gone away. They're still sitting at roughly 960 million barrels, according to our data as of this week. That's still on a relative, yearly, historical, whatever basis you like, extremely high. So the Chinese system can't simply digest and process all of this crude, immediately. So it will, if it does eventuate, it will lead to similar problems to those we saw earlier in the year.
Dan, you wrote an interesting story in the Houston Chronicle this week about the 2021 oil price surge, if you like, could more likely come from products than crude. Could you tell us a little bit of your thesis there?
Well, a lot of that I think is coming from, the shift in, where the consumers are going. If we look at retail sales, in-store shopping over the long holiday weekend in the United States was suppressed, but everybody moved online to take advantage of that. Retailers, starting, around late October, were introducing their so-called Black Friday sales early to try to kind of spread that holiday shopping season over a long period of time, while nobody's staying at home. And we're seeing that in terms of, motor gasoline levels in the United States, everybody's staying home, but all those products need to be shipped. We talked recently about, vessel traffic, that's being increased because the shipping capacity on airlines is diminished. So we're seeing, I think colleague of mine, we called it, demand in other areas. We can look at the big picture in terms of crude oil, but it's really about it's really a story about products keeping things propped up, particularly in the diesel market. And we may start to see, some of this jet fuel turn around as we move into the first quarter. So, I think the conversation for the immediate term will be about product demand.
Carole, looking at the reports yesterday, the Secretary of the Treasury of the U.S. and the Fed chairman was in front of Congress. And again, it seems a slightly divergent views as to what is the route forward for the U.S. I'm wondering, how important do you think that alignment is? It has been a sort of an underpinning of the recovery, it would appear, in America. Do you see any divergence there? What's your thoughts on that?
Yeah, overall, if we look at the expectations for this year, for next year, I don't think, first of all, that the news of the vaccine was going to change the forecast and the expectations for next year, at least the economic forecast, upside down. You see, because many of these expectations already factored in the possibility of the development of a vaccine and make it available probably from mid of next year onwards. So I don't think, big institutions such as the US Fed or here the European Central Bank or other international organizations such as the IMF or World Bank are going to change drastically their position vis-a-vis what's going to happen next year. It's not just about next year, it's the coming few years. And they openly said that the vaccine news definitely is positive, but something that has been factored in. So they're not going to change their forecast then.
Well, I suppose
at least not drastically.
Well, yeah, not drastically. But ultimately, I suppose a lot will happen, and a lot will depend, at least in the context of the US, who wins those last two Senate seats, and indeed if Janet Yellen as Treasury Secretary will have the backing of the Senate or the fight with the Senate. And that will be huge, I think, from the point of view of stimulus. But Kevin, coming back to the tankers on the seas heading towards Asia, I'm wondering, is that potentially an appetite for lighter crudes coming out of the US? Is there a composition that the Chinese are looking for now, a jet fuel coming back, et cetera, that they're looking for a different type of barrel?
That's a very interesting question. Jet fuel, I'm not sure, is going to be the savior of any market anytime soon. But refineries are never run on jet economics anyway. You're talking sort of 5 to 10% of yield.
It's that last 10%, if you like, of what might be absent from the market in a way coming into next year with the recovery of other areas, but jet fuel still down. IATA are forecasting that there will be 1 billion more people flying next year than this year.
Yeah, I mean, you're not wrong. I mean, refineries don't run, just sort of independently in order to just produce gasoline. You've got to take the weighted average of your whole refinery yield, right? So jet is part of that, but jet has been so weak that the other products that come out, the gasoline, the diesel, etc., have had to compensate for that weakness. On the back of that, I don't see that jet is going to save anything anytime soon. I mean, I read similar reports from IATA. Like you say, they're saying, and they have to kind of talk their book to an extent. They're saying there's going to be an awful lot more people traveling next year. But if you also look at the outlook in terms of losses, in terms of cash flow, in terms of cash reserves with the airlines, they're in a pretty bad situation. And the vaccine, Dan and I were talking about this before we came on air. The vaccine is probably going to roll out at some point in the middle of next year in terms of sort of meaningful...
Middle of next week, I think. I mean, it's...
in terms of meaningful impact, obviously the vulnerable will get it first, and we'll see that over the first few months of 2021. But in terms of...
But ultimately, once you protect the vulnerable, I mean, the sort of the as you progressively go through we're all vulnerable on some level. But in terms of but once you immune the very vulnerable, then a lot can return to normal, because those that aren't so vulnerable, you're not making policy decisions around.
Yeah, I'd agree with that as well. I mean, I think there's an importance in keeping perspective here, right? It's not necessarily going to be the situation, and lots of scientists have said the same, that we will eradicate this virus. We won't. It will exist in some form or other, just in very limited numbers. And as you say, as long as you protect the vulnerable from the worst of the symptoms and the worst of the condition, then generally, yes, we should normalize. But I still think that takes time. I don't think the first quarter next year we're all popping to Bali for Chinese New Year.
Well, maybe you're not, but Dr. Carole waving her hands there, I'm sure she wants to go to Bali.
Yeah, I would love to. I can't wait really to go back to flying. But you see, there was an interesting report on the distinction between casual travelers for holiday, for going on tourism, and business traveler. And if you look at the financial crisis of 2008, post-2008, you can see that it took a while for the business travel to pick up. And today, with many things moved, virtually online, then I wonder whether people are factoring in this dimension, distinction between just, the average person in the street going to see families or going just for tourism, and also the business traveler, which contributed to a big chunk of the demand on air travel. And Sean, allow me just to go back to your point about the fiscal stimulus in the US. There could be their silver lining irrespective of who wins the Senate, because the vaccine news actually might support a smaller fiscal stimulus package, and that has a better chance of being passed.
Yeah, it certainly gives some muscle to the Republican view. Dan, the flying in the U.S. over Thanksgiving, I believe the data point was 9 million passengers. It seemed to be a phenomenal number. It strikes me that, as indicated there by Carole, that people are going to be very comfortable quickly getting back on airplanes, but businesses may not be so quickly comfortable paying for very expensive business class seats again, not for anything to do with COVID, but purely for the bottom line.
Sure. I'm jotting down notes here, and I wonder, what does normal look like in mid 2021? In the same context that we're talking about, the crude oil environment, is $50 normal, or is $100 normal per barrel? So what is post-COVID? What does post-pandemic life look like? I think it's easy to look at things like third quarter growth in the 30 percentile range and say, wow, that's phenomenal, but what did we come out of? So I think it's a matter of perspective on what things look like next year. I'm thinking about the discussion on Chinese appetite for crude oil in the fourth quarter, and I'd be curious to hear what Kevin would say about what's the year-on-year comparison, because I remember hearing similar arguments in fourth quarter 2019 that the teapots got their quotas in, and so they can start taking in all this crude oil. So it's like, can we take the pandemic out of the conversation now and really reflect on what we think is going to be "quote unquote" normal next year? I don't.
Well, if we were equity traders or equity analysts, we might be. What's COVID? I mean, my God, I don't even know what that is. Let's go to the survey question, which just tackles this point of the return to air travel and the jet fuel. So based on the IATA report yesterday, IATA forecast 2.8 billion airline passengers will travel in 21. That's a gain of 1 billion over 2020. But the question is, when will we return to the altitude of 4.5 billion that traveled in 2019? So we had 1.8 this year we're currently in. We're going to have 2.8 next year. But when do we get back to 4.5? 2022, 2023, or 2024 and after? What's the view in this room? And then we're going to put our panelists on the spot to make a prediction of what's going to happen with OPEC over the next few days. So pick your number. When do we get to 4.5 billion? Back to where we were. Kevin, let's kick off with you as we started. What's your call on where OPEC goes these next 24, 48 hours?
OPEC has become much more responsive, much more disciplined about its actions relative to the market. It has its monthly meetings now, and I think it would be very, very imprudent to see them do anything with the cut. Any sort of increase threatens where we are on Brent, where we are on WTI. And I think the members will. I mean, Carole mentions that there's never really consensus. There's sort of creative tension that forces an agreement and a statement at the end of the meeting. And I think that's probably going to be the situation here. I think we'll see the 9.7 maintained.
Carole, over to you. I mean, I don't know how many obituaries I've read on OPEC over the years, but certainly I've penned a few myself. I'm wondering if on this occasion we're getting into the zone of this 23 countries are really indicating a stress to hold this together. I mean, they've got another 16 months to go.
Yeah, you're absolutely right about the arbitrary for OPEC, but I don't think it's going to go anywhere anytime soon. They've been through more difficult times, perhaps in terms of getting into an agreement. Now you're asking a difficult question of what they can do in the next 2 days. I think what they did on Monday proved market expectations really wrong, because everybody was expecting them to reach a deal. But there could be also some face-saving solution, either a compromise to simply roll over the existing cuts by 1 month. But whatever they agree on, if they agree to keep the current cuts as they are, then I would say this is when the real cheating is going to start, because market fundamentals do not support a relax. I mean, at the end, it's what they want to achieve, what kind of price level. If they want to see the price level falling back to what we saw over the last few months and even heading lower, then it's fine. They can always, increase their production. But if their target is to maintain the last upward pressure that we saw on prices end of November, then I think it makes sense to roll over the cuts for a few months, but I don't think it's going to be 3 months, though I say that with big hesitation because they already proved everyone wrong. Let's see what they will say on Thursday, if they agree to reach a decision on Thursday.
Dan, your thoughts? I know it's not fair leaving you third, given that but they've both said the same thing, right? They're both going with the Monday call. Yeah, roll over as was. They're just going to have a lot of shouting at each other, but they're going to go and do the exact thing that the market expects. I'm not in that camp. What's your thoughts?
Well, I've heard talk that maybe there's a compromise. It's like we're not going to roll over as vigilant as we might, but I wonder how much, how many times have we had, I commented the other day that it seems like every time there's a big OPEC meeting, somebody's breaking rank, somebody's talking up, maybe discipline isn't as strong as it should be, somebody's upset that they're not producing as much as they want to be. You have 23 players all in the same room, and each of them have their own agendas on what they need in terms of making their economics float. So I wonder if this is just talk up to try to get all the sheep in the same pen in terms of where are we going. I mean, I don't think anybody wants to see a price war like we saw earlier this year, which we saw U.S. crude oil into negative territory. So I don't think that's in anybody's interest. UAE might be a bit emboldened with its newfound reserves, trying to get those barrels on the market, but I don't see that it's in anybody's interest, at least in terms of the sellers, to break rank right now. Maybe we can revisit this discussion and see how much discipline will hold in the second half of 2021. But now is not the time for that sort of talk.
I mean, Kevin, are we talking really about sentiment here? At the end of the day, we're already moving into a February contract. Deliveries that we're talking about, if they were to come on the market in January, would not be, reaching anywhere until February, March. And we're already into that sort of second quarter space. So is it more about sentiment than actual physical barrels? There's no physical barrels going to be coming on the market on January 1, but the possibility of moving them, I suppose, is the thing. What's your view on that, sentiment versus real?
But sentiment is always such a huge factor in oil price. It doesn't change. Fundamentally, you're right. You're not going to see the impact of an increase or a maintenance of a cut or whatever for several months, but the impact will be seen on sentiment and therefore in price at the very front. I mean, I was having a conversation just the other day about how the equity markets have responded to a vaccine and how the front end of the Brent curve has not responded to a vaccine, but the back end of the curve has started to. And it's all about timing. It's all about the fact that you've got a physical market versus a share market or a paper market. And so sentiment is huge. But as you say, it takes time for the actual physical barrels to arrive, and therefore you see the change in the fundamentals.
Yeah, there's nothing fundamental. You don't have to store an Amazon sentiment in a box somewhere. You do have to store 1 million barrels of oil. Let's get the survey result before going to last comment. So when will we get back to where we were? 22, 24, 2023, 42. But a third still saying way in the future after 2024. Carole, just some closing thoughts on the rest of the week. It's inevitably everything OPEC. Anything else that might be getting your attention?
Not really, I'm focusing primarily on what OPEC will do and how the oil price will react, the market will react, and that you can see it with the oil price movement. But for now, I'm curious, Sean, what did you vote for? What did you select?
Oh, in terms of airlines?
Yes.
I did 24 plus.
Wow. So you're not going anywhere next year?
No, I mean, I'm happy to travel on a personal basis, but I just don't think businesses will be facilitating business travel for a while.
Yeah, I mean, for me, I was a little bit more ambitious. I said 2022, but I was leaning more towards 2023. I was just looking at what the airline companies were predicting, and they do say at least not before 2022 to go back to normal.
Yeah, I think it will take a while, but I do think people are ready to travel. I mean, we're in Dubai, and the bookings for arrivals into the UAE for the holiday season, you cannot get a booking in a restaurant in any of the hotels in the Jumeirah hotel group, not because they're necessarily full, but because they're just for residents. They're keeping all the hotels, all of the restaurants, all of the activities and as you know, there are many hotels here, that you have to be a 7-day resident to book into any of the facilities at the hotels over the sort of mid-December to New Year period. But Dan, your closing thoughts, what are we going to be watching in the US other than the certification of the election, perhaps?
Vaccine news, I think, there's been a lot of talk about, Moderna was the latest one to seek approval this week, but then I guess we have to look long term on what that vaccine is going to look like. And then there's prospects of this stimulus package, as the rest of the panel had discussed. Are those developments going to see light, or is that just talk for the sake of talk as we roll into the new Biden administration?
Kevin, just a final comment. I know I beat the drum on it a little bit, but this Australia-China thing is beginning to, it's starting to have sort of larger noises about it. I'm wondering, from sitting in Singapore, is it a non-story, or does it feel like it's something that's getting legs?
It's getting legs, and not necessarily in a rational way, isn't it? It's becoming an almost personal spat. You've got Morrison on one side and Zhao Lijian on the other side of an argument. It doesn't affect us in Singapore, but it's an ongoing trade tension, and we see it across the iron ore space. We see it on coal. We see it, obviously there are stories about wine and so on, but as Kpler, we're seeing it in terms of increased congestion. So our data are showing us, the impact of the spat, if you like, on coal vessels in particular being unable to discharge. That eventually is going to have an impact on potentially both sides. It's going to have an impact on Indonesia. It's going to have an impact on Russia. It's going to have an impact on all other coal producers. So it's starting to get bigger. It's starting to get more serious now.
Well, let's wrap up there. I'm just going to conclude by saying happy UAE National Day today for all of those that may be waving the flag on that. And later today, we're going to get Robin Mills' views on where OPEC goes from here. And I look forward to that, because obviously Robin, a longtime OPEC watcher, very wise on that subject. Thank you, Dan. Thank you, Carole. Thank you, Kevin. Have a great day, a safe day, and we'll catch up later in the week. All the best.
You too. Bye-bye.